Silver is down. The all-time high on silver is $50 per ounce. It's been there twice in history. It's now down to 35, 36. So compared to 50, silver is down. Gold is making all-time highs, new all-time highs. Silver's not. That's all I meant was if you just look at previous prices of gold and silver, silver is down from its all-time high. Gold is not. Gold is making all-time highs. I own them both.
Jim Rogers is a well-known American investor, financial commentator, and co-founder of the Quantum Fund. He emphasizes his commitment to holding both gold and silver as long-term assets. He explains that while gold is reaching new all-time highs, silver remains well below its historical peak of $50 per ounce, currently trading around $35 or $36 per ounce. In contrast, gold continues to climb steadily. When comparing their past performance, Rogers points out that silver is still lagging, making it a potentially more attractive investment. Despite this difference, he owns both metals and has never sold either. Spot silver recently dropped to $36.76 per troy ounce, marking a 2.3% decline and falling approximately $1 from recent levels above $37. This recent sell-off pushed silver down to levels not seen since early 2012. Meanwhile, spot gold remains steady near $3,364 per ounce, showing minimal weekly gains. Gold's resilience, despite rising market risk sentiment and global trade optimism, highlights its ongoing appeal as a safe haven asset during uncertain times. Jim Rogers urges everyone to own some gold and silver, even if only as insurance, advising people to keep silver under the bed or gold in the closet. While U.S. stocks have been reaching all-time highs, he notes that most commodities, such as oil, remain well below their peaks. This, in his view, signals better opportunities in commodities compared to overvalued equities. U.S. stocks have rebounded strongly after a rough start to the year. In July, the S&P 500 and Nasdaq posted gains of around 2.3% and 3.7% respectively, marking multiple consecutive months of growth. However, uncertainty around the U.S. economy and interest rates still looms large. Before we get started, like and share this video, subscribe to our channel, and hit the bell icon so you never miss an update.
The thing with Mr. Trump is, with Margaret Thatcher, we more or less knew what she would do. If something happened, we knew how she thought and we knew what she would do. The situation with Mr. Trump is he doesn't have an underlying philosophy. He just watches TV and then decides what to do if he likes it. If he doesn't like it, he'll do something else. But it's difficult with Mr. Trump because there is no basic, deep, underlying philosophy guiding him. And that makes it difficult. Not for him, it makes it difficult for outsiders. Mr. Trump just doesn't have a basic philosophy, and so if something happens, he changes his mind and does whatever he sees on TV. He does what he thinks the TV people want, and that's what guides him. I think he mainly watches Fox. It doesn't matter what he watches, whatever he watches, that's where he decides. Silver is down. The all-time high on silver is $50 per ounce. It's been there twice in history. It's now down to 35, 36. So compared to 50, silver is down. Gold is making all-time highs, new all-time highs. Silver's not. That's all I meant was if you just look at previous prices of gold and silver, silver is down from its all-time high. Gold is not. Gold is making all-time highs. I own them both. Many politicians have wanted to fire the Fed many times in American history. That has happened. This is not the first time. Mr. Trump, he really doesn't have to. All he has to do is sit around and wait because the guy's going to leave next May, no matter what happens. So I don't know if Trump is patient enough, but he's going to get rid of the Fed, whether he likes it or not. And he certainly wants to. And I presume he will appoint somebody who will be an easy money, low interest kind of Fed chairman. That's what Trump wants, and that's what he will get. Gold, I've owned gold for decades, and I have never sold any gold. I hope I'm smart enough to buy more gold if it goes down. Right now, I bought more silver recently. Silver's cheaper on a historic basis, but I own them both. I've never sold either, and I hope I'm smart enough to buy more. I hope that I'm smart enough for my children to own my silver and gold someday. I don't see any reason ever to sell my gold and silver. Well, I mean, if the world comes to an end, we'll have to sell our gold and silver. If there's a disaster out there. But right now, as far as I am concerned, my gold and silver will be for my children someday. We were specifically speaking of silver and gold, both of which are commodities. I own both. Everybody should own both as insurance, if nothing else. So please, if you don't have some silver under the bed or some gold in the closet, please get some as insurance, if nothing else. Now, to commodities, other commodities, yes, most commodities, U.S. stocks are making all-time highs. Most commodities are down from their all-time highs. Oil, for instance, is down a lot from its all-time high. So I suspect that there are better opportunities in commodities than there are in U.S. stocks right now. But that's often been the case. It happens to be the case right now.
Jim Rogers acknowledges that during the next major financial crisis, the US dollar will likely surge, as it traditionally does in times of global panic, and when that happens, he expects he will have to sell. However, he admits his most significant dilemma is not knowing where to put the money afterward. Gold is typically denominated in US dollars, and the value of the dollar can have a significant impact on the live gold price. As the dollar strengthens, it can potentially make gold relatively more expensive for foreign investors, which in turn drives down the price. On the other hand, if the dollar is weakening, it can potentially make gold relatively less expensive for foreign investors, driving gold prices higher in the process. Rogers mentions that, in theory, the Chinese yuan could emerge as a strong global currency competitor, but he quickly points out a critical flaw. It's not yet fully convertible. Without convertibility, he explains, a currency can't become a truly international reserve asset. As global confidence in the US dollar erodes in the wake of Washington's Liberation Day tariffs, economists at the annual meeting of the New Champions debated whether China's yuan could emerge as a credible alternative to challenge the world's dominant currency. Let's get back to the interview.
Well, Steve, what I mainly think about is U.S. stock market has been going up since 2008, 2009. That's the longest in American history. I repeat, it's the longest in American history without a big problem. Now, Mr. Trump will tell you, don't worry, everything is okay. We know what we're doing. We've changed the world. We have all the answers. Well, maybe he's right, but I've been around long enough to doubt that that's accurate. I think I know we're going to have some huge problems sometime in the next year or two, and they're probably going to be the worst in my lifetime because it's been such a very, very long period without a problem, and the debt has skyrocketed. I mean, when I look at the debt numbers, I'm shocked, but I don't understand. Don't the people in Washington know how to add? Can't they subtract? Don't they know what this means? And the problem is everybody in Washington seems to think, hooray, no problem, which makes me worry very badly, Steve, because I'm afraid that when we do have problems again, I know that if it goes up a lot, which I suspect it will in the next crisis, and I'll have to sell, but my problem is I don't know where to put the money. After I sell the dollar, I don't know where to put the money. If you have the answer, Steve, please do not announce it on this show. Send me a private email, because I'm looking, and I would like to find. In theory, the Chinese currency could and should be the new competitor. China's one of the few places where I still own shares, but whether we like it or not, China's on the rise again. China's the only country in world history that's been on top 3 or 4 times. Rome was great once. Britain was great once. Egypt was great once. China's been the top nation 3 or 4 times in the past few thousand years. They've collapsed 3 or 4 times in the last few thousand years, but at the moment they're rising again, and I don't know why they do it. I don't know why they're the only country, but for whatever reason, China's on the rise again, and my kids speak Mandarin because I hope I'm preparing them for the 21st century. Whether we like it or not, China's going to be a very important country in the 21st century. I hope my kids are ready.
Jim Rogers shares a cautious yet honest view of where things might be heading. He's concerned about rising debt, unpredictable leadership, and how long the U.S. market can continue to climb without a severe correction. For him, holding assets like gold, silver, and other commodities isn't just a strategy, it's protection in uncertain times. Although he sees potential in currencies like the Chinese yuan, he remains realistic about the challenges they face. With markets hitting highs and confidence in the system feeling shaky, Rogers' message is clear: stay alert, think long-term, and don't blindly trust that things will always remain the same. What are your thoughts on Jim Rogers' outlook for the economy and future of global currencies? Share your thoughts in the comments below. If you found this video helpful, don't forget to like and share it with your friends. Be sure to leave a comment, subscribe to our channel, and hit the bell icon to stay updated with our latest content. Thank you for tuning in.